Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
So, here's the scoop on the economy. Everyone was betting that the Fed would start slashing interest rates by May, thinking inflation was on its way out and job markets would chill. But come May, and the Fed's like, hold up, we're not cutting rates just yet. Some folks even think rates will stay high till 2025, which is wild with an election around the corner. Back in December, Fed Chair Jerome Powell hinted at rate cuts, and the markets went bananas. But now, the Fed's playing it tough, sticking to their guns despite inflation being stubborn and job markets not budging. For instance, the PCE index, which the Fed keeps an eye on, ticked up from 2.5% to 2.7% in April. And the CPI? It's sticking around too, climbing from 3.2% to 3.5% in March. People are spending like there's no tomorrow, piling on debt instead of saving up. The savings rate dipped from 4.1% to 3.2% in just a couple of months, and household debts hitting record highs. Plus, unemployment staying low, dropping a smidge from 3.9% to 3.8%. Even though the economy's growth slowed a bit, first quarter GDP was only 1.6% when we expected 2.4%. It's not enough for the Fed to hit the stimulus button. Powell's always said he'll follow the data, and right now the data's not in favor of loosening up. Market-wise, it's been a bummer. Bitcoin was floating between $60,000 and $65,000 before the Fed meeting, and stocks were kinda meh. The dollar got stronger, though, which smacked other currencies around, like the yen hitting its lowest against the dollar since 1990. Powell's not keen on hiking rates next, but he's not giving us any hints on when they might drop. So, we're in for a dull summer, especially for Bitcoin fans hoping for a price surge after the halving. Looks like we're stuck with sideways trading for a bit, unless something major shakes things up. But hey, long-term, Bitcoin's still a solid bet. Once the Fed eases up and the dollar starts sliding, Bitcoin will be the place to hide from currency devaluation. Those U.S. spot BTC ETFs will shine, and patient investors will get their payday. Until then, might as well kick back and enjoy the summer, right? It's a bit shaky, but some traders are feeling optimistic, thinking the worst of the sell-off might be over, and altcoins might have already felt the brunt of it. Despite the uncertainty, there's still a strong belief in crypto's value growth. Take Cathie Wood from ARK Invest. She's upped her Bitcoin price target to a whopping 2.3 meters and even suggests it could soar to 3.8 meters if more institutions jump on board. The job market's sending mixed signals, though. Private sector employment numbers are down by 192,000 jobs, and the JOLTS report shows a significant drop in job openings, especially in construction. It looks like employers aren't as eager to hire, which could hint at a looming employment slump. Over in the commodities market, oil prices fell nearly 3% after inventory levels were higher than expected. That's not a great sign for economic growth. Plus, U.S. manufacturing data is showing higher costs and fewer orders, classic signs of stagflation that could spell trouble for producers. In short, crypto's facing a real test with the current economic headwinds, but there's still a glimmer of hope among the believers. The FOMC's holding rates steady for now, but we'll have to see if they can steer us clear of a recession. Before we dive into today's market-breaking news about CZ, Binance, and more, please hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. So, Binance's big boss, Changpeng Zhao, just got a 4-month timeout for not playing by the rules with money laundering laws. It's like the court's way of telling everyone in the crypto world to shape up and follow the anti-money laundering playbook. Aaron Lane, this law prof from RMIT Blockchain Innovation Hub, says it's a heads up to all the crypto service folks that they can't treat this like the Wild West anymore. Despite Zhao getting what some say is just a light tap on the wrist for the serious charges, he's taken it on the chin, stepped down as CEO, and even forked over a hefty $50 million fine. Meanwhile, the U.S. took down another crypto giant, Sam Bankman-Fried of FTX, with a whopping 25-year sentence for fraud. And it's not just them. Other crypto honchos like Do Kwon of Terraform Labs and Alex Mashinsky of Celsius Network are also in hot water with the law. Moving forward, it's clear that crypto companies need to get their act together with anti-money laundering and KYC, or they'll be facing the music from the SEC and the Department of Justice. As for Zhao, he's planning to chill in jail and work on his blockchain education project, reassuring Binance users that their funds are in safe hands and emphasizing the importance of compliance in the industry. But the SEC is still lurking, keeping an eye on Binance US for any funny business with customer funds. The crypto world is buzzing with the recent US crackdown on prominent figures like Roger Ver, nicknamed Bitcoin Jesus. It seems the US government is tightening its grip on the crypto industry, with Ver's arrest in Spain for tax evasion adding fuel to the fire. Industry insiders are divided. Some, like David Shares, warn that the government's reach could extend to more in the crypto community, while others, like Dan Held, view Ver's arrest as a positive step for Bitcoin. Amidst these differing views, the upcoming U.S. elections could significantly shape the future of cryptocurrency in the country. It's a complex situation that's got everyone talking and wondering, what's next for the world of digital currencies? Block, co-founded by Twitter's Jack Dorsey, is under federal investigation for compliance lapses in its Square and Cash app services. A former employee has revealed that these services failed to collect adequate customer information for risk assessment and process transactions involving sanctioned countries and terrorist groups. Despite warnings, Block did not amend its processes. The provided documents highlight numerous small transactions linked to entities in sanctioned countries like Cuba, Iran, Russia, and Venezuela. Block's spokesperson asserts the company has a robust and evolving compliance program, including systems and processes for sanction issues to enhance security within its ecosystem. Block, formerly Square, is a leading fintech company with notable applications like Cash App, boasting 55 million monthly active users and handling $248 billion in the past year, generating $14.3 billion in revenue and $4.32 billion in gross profit in 2023. Senator Cynthia Lummis is taking a stand against the U.S. government's tough stance on crypto. She's all for Bitcoin and thinks the industry's getting a raw deal with the DOJ, calling non-custodial software a money service. Lummis says that's just not right and goes against what the Treasury's been saying. She's also not happy with the SEC, who she feels is overstepping its bounds by labeling almost all cryptos as securities. She's pushing for clearer rules and even teamed up with Senator Gillibrand to get a bill going that'll sort out the digital asset mess. And while all this is happening, Bitcoin's price is bouncing around, showing just how much this debate matters. So, April was a pretty chill month for the crypto world, at least when it comes to getting scammed. CertiK says it was the quietest since they started keeping tabs in 2021, with only about $25.7 million swiped. That's a whopping 141% drop from March. Talk about a breather. But it wasn't all smooth sailing. There was this meme coin called Condom that popped on Solana and snagged a cool $933,000 before anyone could say scam. Then there's Zcasino, which got all cagey and wouldn't let folks pull out their cash. It's still up in the air if it's a scam, but CertiK hasn't slapped that label on it yet. Oh, and let's not forget the big oopsie at the Bitcoin Lightning Network exchange Fix Float, where hackers made off with $3 million. Zooming out a bit, the first quarter of 2024 saw $336 million in losses, which sounds like a lot until you hear that 2023 had $1.8 billion in thefts, and that was only half of what got nabbed in 2022. And for a bit of good news, BlackRock's build is now the big kahuna of encrypted treasury funds. Tether Holdings, the folks behind the biggest stablecoin, USDT, just had a killer first quarter in 2024, raking in a whopping $4.52 billion in net profit. For the first time ever, they're showing off their net equity, which hit $11.37 billion by the end of March. That's a big jump from the $7.01 billion back at the end of 2023. A cool billion of that profit came from playing it safe with U.S. Treasury bonds, while the rest, about $3.52 billion, came from smart bets on Bitcoin and gold. USDT is still the heavyweight champ of stablecoins, with a value north of $110 billion, and they pumped out $12.5 billion USDT in just 3 months. They've also been padding their excess reserve fund by another billion, which is like their safety net to keep stablecoins. Well, stable. This fund's now sitting pretty at just under $6.3 billion. And get this, they owe over $104 billion related to USDT, but their reserve assets have outpaced that debt by a sweet $6.2 billion as of the end of March. Tether's not just playing it safe, though. They're the 7th largest Bitcoin owner on the planet, holding on to 75,354 BTC, which is worth over $438 billion. They're planning to reinvest 15% of their net profit back into Bitcoin, diversifying their backup assets for USDT. Even with Bitcoin's price dip below $60,000, Tether's sitting on an unrealized profit of over 91%, which is more than $2 billion according to the number crunchers at CoinStats. So yeah, Tether's making some serious moves and shaking things up in the crypto world. About BlackRock's Build Fund, which is totally crushing it right now. In less than 6 weeks, it's become the big boss of encrypted treasury funds, snagging nearly 30% of the $1.3 billion market. That's right. Build's market cap is already at $375 million, leaving Franklin Templeton's Benji, which has been around for a year, in the dust with $368 million. Larry Fink, the head honcho at BlackRock, is all about tokenizing real-world assets on the blockchain. He thinks it's the future of making capital market transactions way smoother. But here's the kicker. Even though tokenizing stuff like treasury bonds sounds cool, not a lot of investors are biting just yet. The demand for these tokenized treasures isn't matching the hype. So, Build's quick rise to the top shows there's potential in tokenized treasury funds, but the real challenge is getting investors to jump on board with the same enthusiasm. It's a game of balancing what's hot and what's actually selling. So BlackRock's Bitcoin ETF just had a bit of a rough day with its first ever outflow happening. It's like investors pulled out $36.9 million in one go. And it's not just them. Other Bitcoin ETFs in the US also felt the pinch, with a total of $526.8 million heading out the door. This all went down while Bitcoin's price took a 10.7% nosedive over the week. But hey, it's not all doom and gloom. These ups and downs are pretty standard for ETFs. It's just part of the game. Take gold ETFs, for instance. They've had some serious outflows this year, but the price of gold still managed to climb by 16%. And if we're talking examples, Fidelity's Wise Origin Bitcoin Fund and Grayscale's Bitcoin Trust both saw some hefty outflows too, like $191.1 million and $167.4 million respectively. It just shows that the market's always moving, and even the big players have to ride the wave. MicroStrategy is rolling out this new thing called MicroStrategy Orange, and it's all about giving you a digital ID that's super secure, because it's on the Bitcoin network. Think of it like a digital passport that nobody can mess with. They've got this Orange service and SDK, plus some apps, and one of them, Orange for Outlook, is already making sure your emails are legit with digital signatures. The cool part? It's open source, doesn't need any extra blockchain stuff, and can handle a ton of IDs in one go. So, if you're into keeping your identity safe and sound, MicroStrategy's got your back with this new tech.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.